Have you ever found yourself in a situation where you analyze a trade, it looks so good, but then you begin to hesitate to enter into that trade because maybe you are not very sure, and before you know it, it becomes analysis paralysis and you are not able to take the trade, and the trade ends up going in your direction that you would have been in if you had taken that trade, and you start to regret it. This is what we call fear of losing out or fear of losing money. All right. So you do not want to experience it. And because of that, you begin to hesitate. So in this session, I'm going to be talking about trading fears and how you can prevent them and improve your trades based on that. My name is Olu Gbemi, and please stay with me in the next few minutes as I share with you two kinds of fears that we experience in the market, how they affect us, and how we can prevent them in order for us to do better as traders. So we have, first, I'm going to be talking about fear of loss or fear of losing money. If you are very afraid of losing money, there is a possibility that you are not going to click that button and do your buy or sell when your trade setup is met. And this is usually happening because you are trading with very high risk or because you are trading what you cannot afford to lose. All right. So because of that, you know, if you're not careful, there's a possibility of losing that money and you're very scared. And because of that, you didn't enter the trade. So what can you do? What are the possible solutions? The first way is think about risk in percentage, okay, instead of just the monetary value. So whatever amount you're risking, don't just look at it as, oh, it's just $100, oh, it's just $200. What percentage is it of my account size? Because if it's a large percent, that's when you should be afraid. If it's very small percentage of your account size, it shouldn't bother you so much. You also want to minimize how much risk you're taking per trade, because that would help for you to prevent this fear of missing out, and invest or trade with an amount that you're comfortable losing, that even if you lose, it won't affect your trade so much. The other kind of fear that we experience in the market is fear of missing out. All right. If you are afraid of missing out, that is where you see yourself becoming very impatient, because now you begin to compare yourself with others. And it also happens where you do not have clear trading plan. So because you don't know exactly what you want to do, you are afraid of missing out and you can take impulsive trading. So what can you also do in this situation to prevent the fear of missing out? You want to work on your trading plan, your personal trading plan. And that means you have to build a trading plan for yourself that you will follow through with. The next possible solution is having a backtest of whatever strategy you learn that you want to start trading with. Backtest it so that you have more confidence in trading it. If you see that in the past the strategy has worked, if it had worked in the past, there's a possibility that it works in the future. And also, do not compare yourself with others. You want to focus on your own trading plan and trade based on how you have prepared to trade, rather than looking at what others are doing. This way, you'll be able to prevent the fear of missing out. And when you prevent this fear from affecting your trade, then you will be able to improve your trade. I hope you got value from what I shared with you briefly in this session. Please do well to join me every day of the week in XM Live Education Rooms and learn more about how to trade better regularly. Thank you.